So this liquidity levels is something that I think is beginning to concern a few people. And it does appear that the central bank is beginning to establish a comfort level. Last week we saw only one OMO auction, as we've seen for the most part of the last few weeks. Now that we're expecting these OMO maturities this week and the FAAC allocations, do you anticipate that they will increase the number of OMO auctions, or do you think that we're beginning to appreciate the levels that the central bank is comfortable with in terms of liquidity?
I think two things come to mind. In the first place, like you rightly said, we've seen liquidity levels hover around these levels in the last 2 weeks. And central bank has issued OMO once last week, once 2 weeks ago. So you'd be right to say they're probably trying to signal something. But what's interesting is not so much around the liquidity, but it's how it has impacted the level of rates that central bank has actually issued OMO. If you recall the last MPC, they had gone down to say they were not going to change any of the ratios. But what we saw immediately after the MPC probably gave a signal as to, rather than tinker with the MPR, will allow the forces of the market trend the rates lower. And it achieves the same thing. So we leave liquidity here. Banks have no other choice than to figure out other ways of making money, right? And so it wasn't surprising when we saw 2 weeks ago that CBN just came on Thursday when you had the maturities coming, and then they went quiet. And then by the second week, which was last week, we had the same scenario. And then it's interesting how we've moved from 14.3 2 weeks ago down to 11.95.
We are close to single digits now.
Exactly.
And that's for the OMO bill.
Yes.
Because potentially the T-bills could even be lower than that.
PMA came out 1 year, 12.045 or thereabout, and so 75 or so. So the interesting thing for me is, I think for the first time in quite a while, we've had the OMO rates come lower than PMA. So I think CBN is trying to say we are not...
But is that sustainable, or can we expect now that the primary auction rates will be lower than the OMO rate in the subsequent
In terms of sustainability, I think we expect an MPC in May.
Yeah.
Right? So, to my mind, CBN is just saying, banks, you need to utilize the funds. And don't forget, he has signaled this all the way from December of last year, that at some point down the year, we will find interest rates come down. And don't forget, we opened this year with inflation numbers quite high. Yeah. We are down to 13.33. So it just gives him the impetus to say, if inflation numbers are trending lower, there's really no justification to keep interest rates at those high levels anymore. So the market will just probably trend down and factor the impact of inflation and liquidity. So we'll probably see a lot more bullish sentiments in the market, which is what we've seen in the last couple of weeks.
But what is likely to be the impact on the exchange rate? Because that has always been the concern. People feel when rates are much lower, it's easier to speculate on the currency, certainly cheaper to acquire funds to do that. So what do you think is likely to happen, though?
To my mind, again, I think CBN has capacity to defend this currency right now. And if you look at what has happened in the I&E window, for example, and then we are way over 40 billion in terms of turnover, right? So it just suggests that even if you have this level of liquidity, what will happen? Banks have their foreign currency trading position limits capped. You have your net open position limits capped. So in real terms, how much do you want to hold to speculate? And I think they have seen all of these numbers, and don't forget we are getting into an election year which will probably kick down maybe Q3, and then PwC has also said we'll have some level of deval. So I'll see how they marry the numbers, and May MPC might give us a signal as to what they will likely do. But I don't see so much pressure in terms of how this liquidity will impact exchange rate.
So while maybe the open position limits of banks are still regulated and the capacity to speculate, at least from the banks, is still regulated. But if funds are cheaper, those who would like to import goods, with cheaper funds, they can begin to get back in business. And I think that is potentially where the demand can come from. Do you anticipate that could happen?
We need to probably separate the liquidity in the system with the cash in the pockets of individuals or investors, right? The liquidity in the system is a function of cash flowing within the banking system, which is already with the banks anyway. And so if somebody wants to buy USD, he doesn't need the system liquidity, he has cash in his account. He probably
can borrow.
I agree.
At a cheaper rate.
But then the question is, how much borrowing are banks willing to do, even at these levels? Because again, CBN wants to drive credit to the real sector. So if we leave this level of liquidity, we'll expect that banks should lend. But historically, we know we've been here in 2009 when T-bills rates was probably around 1% or 2%, banks didn't lend. Why? Because there are a number of structural issues around lending. From oil and gas to agriculture, you have a number of intervention funds. The government is bringing in a lot of funds around single digits from BOI, from agri funds and all of that. So to my mind, even if you have speculative tendencies, what is critical is if you have the ability to supply the USD. So as long as the I&E window continues to gain traction, like we'll see, and then the economy is quite stable, we are not where we expect it to be, but in terms of stability, we are getting closer to where we want to be. I don't see the kind of push that we had in 2015 or the kind of pressure we had in 2015 or 2014 happening. And like you rightly said, we don't know how long this will hold. We don't know what the central bank has in mind, but I think as we go further down this week and then see what happens in next MPC, it probably gives us a clear signal as to what they're thinking.
So you will say it's probably safer to wait until the MPC to get a much clearer signal from the monetary authorities before we can begin to suggest what is likely to happen over the medium term in terms of rates.
That would be my position.